Hey there, and welcome to another episode of Everybody Counts. It's Malone Bailey's official podcast. I'm Caroline Rosen, and I am from the marketing department at Malone Bailey. Before we jump into today's conversation and I introduce our special guest, let me just give everyone a really quick overview of our podcast. This is a podcast that covers a variety of different topics. So whether it's an SEC or FASB update, or even topics that have to do with practice management, soft skills, and really much, much more. We have all different kinds of guests join us, partners, managers, staff. We have guests from the outside world join us to talk about all the interesting topics that we discuss on this podcast. So today I am joined by one of our audit partners, Leah Gonzales. Hey, Leah, thank you for being here today.
Hi, Caroline. Pleasure to be here.
Well, we're very excited to have you on. And today we are talking about a FASB ASU that impacts a few different topics pertaining to earnings per share, as well as distinguishing liabilities from equity, and also derivatives and hedging. So before we dive into the meat of this ASU, why don't you tell us a little bit about your background?
Sure, I'll be happy to do that. I've been with Malone Bailey since August 2008. So been with the firm for almost 10 years now.
Almost 10 years, right?
Yes, that's right. But previous to that, I was with PwC Chicago.
Okay.
Since I joined Malone Bailey, I've just been exposed to, or I've handled really different, companies in various industries, really small and mid-cap SEC registered companies who've seen a lot of the or have encountered a lot of the issues that are mentioned in today's topic.
Oh, okay, perfect. So you're really the perfect person to be discussing this accounting standard update. So as I mentioned, we are talking about an update that has an impact on various topics, and we'll go ahead and jump right in to the update. Why did FASB decide to issue this update?
That's a good question, Caroline. The board decided to undertake this project primarily to address issues that were identified as a result of the complexity associated with applying GAAP for certain financial instruments with characteristics of both liabilities and equity.
Okay.
There are actually two parts to this update. Part one deals with down-round features that sometimes exist in equity-linked instruments like warrants, convertible preferred shares, and convertible debt instruments. Down-round features in these instruments result in the strike price being reduced on the basis of the pricing of future equity offerings.
Okay.
Issuers, private companies, and stakeholders have expressed concern that the current accounting guidance creates unnecessary cost and complexity for entities that issue this type of financial instruments because it requires, on an ongoing basis, fair value measurement of the entire instrument or conversion option. Because the fair value of these instruments are required to be marked to market at each reporting period, it creates unnecessary income statement volatility associated with the changes in the company's stock price.
Okay.
And so it does not, well, the issuers or the entities believed it does not reflect the economics of the down-round feature, which really exists to protect certain investors from declines in the issuer's share price under certain circumstances.
Okay.
Now, this new ASU addresses these concerns by requiring companies to actually disregard the down-round feature when assessing whether the instrument is indexed to its own stock for purposes of determining whether that instrument should be classified as a liability or equity. Companies that provide earnings per share data will have to adjust their basic EPS calculation for the effect of the feature when it actually gets triggered. That is, when the exercise price of the instrument is adjusted downward because of the down-round feature, and we'll also need to recognize the effect when it gets triggered within equity.
Okay. Well, thank you for that overview. And so who is affected by the amendments in this update?
Okay. The amendments in Part 1 of this update affect those entities that issue or have issued financial instruments with down-round features, and those, of course, that present earnings per share information in their financial statements. Okay. Now, I didn't mention earlier, but there is a Part 2 to the update. Mm-hmm. And the amendments in Part 2 of this update do not have an accounting effect.
Okay. So if we could just now turn to some of the main provisions of this update. You've given a lot of important information, but if we were to just highlight the main provisions, what are they?
Sure, I can do that.
Okay.
So the amendments in Part 1 of this update change the classification analysis of certain equity-linked instruments or embedded features that have down-round features. What this means is that a down-round feature no longer precludes equity classification when an entity assesses whether the instrument is indexed to its own stock. As a result, if the entity or the issuer has a freestanding equity-linked financial instrument like a warrant or the embedded conversion option in convertible preferred shares or convertible debt instruments that has a down-round feature, these would no longer be accounted for as a derivative liability that is required to be measured at a fair value at each reporting period.
Okay.
The update does impact the calculation of earnings per share. Basically, if the down-round feature does get triggered, the effect is treated as a dividend and is presented as a reduction of income available to common shareholders when the issuer calculates their basic EPS.
Okay.
And I mentioned earlier about Part 2 of the update. And Part 2, as I mentioned earlier, does not have an accounting impact. Basically, it now scopes out redeemable financial instruments and mandatory redeemable financial instruments, and mandatorily redeemable non-controlling interests that are issued by non-public entities from ASC 480. Previously, it just provides an indefinite deferral, but now with this update, it permanently scopes out these instruments from ASC 480. So that greatly reduces the complexity that's associated with navigating through the guidance in ASC 480.
Okay. All right. And so when do the provisions of this ASU go into effect?
Well, the provision of the new ASU related to the down-round features are effective for public entities for fiscal years and interim periods within those fiscal years beginning after December 15, 2018. The good news is that early adoption is permitted. So definitely for those companies that wish to apply this new ASU, you can do so now.
Okay.
For all other entities, the amendments are effective for fiscal years beginning after December 15, 2019, and interim periods within fiscal years beginning after December 15, 2020. So again, the early adoption provision applies to all other entities.
Okay. Well, Leah, thank you so much for that overview. I do want to point out that you can go to the FASB website and find a very detailed document that spells out this entire ASU. So please be sure to go to the FASB website and check that out. You can also go to our website at malonebailey.com. Please visit the podcast section as well as the newsletter section of our website, where you can link to the FASB website and to lots of important resources specifically that do pertain to this update. So thank you again, Leah. And we're going to switch gears just a little bit before we wrap up here. This is called our This or That section, and this is where we give our guests two options to choose from. The topic is almost always unrelated to the discussion of the podcast. So are you ready?
I'm ready.
Okay. Surf or turf? Do you prefer seafood or do you prefer steaks?
Seafood.
Seafood? Okay.
Yes.
All right. What's your favorite seafood?
Well, I just went to a vacation in Maine. So right now lobster is
Okay.
probably my favorite seafood at this time.
I don't blame you for that, Leah. Well, thank you so much for playing along and participating in our This or That section. And thank you to all of our listeners for tuning in to our podcast. As I mentioned before, please be sure to check out our website. Again, that's malonebailey.com for lots of great resources, as well as other episodes of this podcast. We will see you guys next time, and thanks so much for tuning in.